Good morning, everyone. Welcome to this review for the week of the 23rd of February. And global markets just continue to move higher. It was a little bit more of a pause week, but nevertheless fairly positive. Now, for those of you that have been following what I've been writing over the last 18 months know that I've been consistently saying that 2014 and 2013 would be extremely good years for the market and terrific opportunities to make really good profits. Back in August of 2012, when I first started saying that, there were very few people that were thinking along those lines. 2013 has worked out to be really quite a productive year. Not necessarily easy, but certainly if you know how to go about making money consistently in the market, it was there, it was available. And certainly 2014 will be a little bit more challenging, but nevertheless, I think the opportunities are even better. So markets continue to roll on. Let's jump in and have a look at the action last week. But just before I do, I'll just mention that I'm running an online training session this Tuesday coming. I'm going to be looking at some of the trends, some of the best stocks, and in particular, what you need to do to make money out of the market. So I'll provide some more detail on that in just a few minutes. So the S&P index ended up gaining 42 points on the week. It was a bit of a week of consolidation, particularly after the very strong week the week before, but as you'll see from the chart, there wasn't any retracement at all, and I think that's significant. We had a really strong up week the week before. It would be normal for markets to pull back a little bit, but it didn't happen. They just went sideways. So US market showing a lot of signs of strength. The other thing that I find really encouraging is that the Russell 2000, which covers stocks from 1,000 down to 3,000 in terms of market size, it's actually doing slightly better than the S&P. So the broad market is holding up extremely well. Now, there is a huge diversity in valuations. Some sectors and some stocks are just stupid. Stocks like Facebook, Tesla Motors, they're trading on price earnings multiples in the hundreds, which is just ridiculous. However, other sections of the US stock market are actually really attractively priced. So there's tremendous diversity there. So if you know what you're doing, there's terrific opportunity in America, and I've certainly been doing quite a bit of that. Anyone that's interested in diversifying into a much more active market, then you might want to get in touch with me on that score. So let's have a look at the S&P 500 index. Now you can see we've had this Fibonacci structure on here now for quite a few weeks. 1725 was the target. The market didn't get there, showed enough strength to turn around, and as you can see 2 weeks ago, the rise was quite stunning. And then we just got into this little pause last week. The last 5 sessions have essentially just gone sideways, and that's a real sign of strength. Normally, I would have thought this would have pulled back, perhaps 10 or 15 or 20 points. That didn't happen, so you'd have to say that the overwhelming odds are that the S&P is going to break to a new high, and of course, that means that sentiment for stocks around the world is going to remain positive. Let's just have a look at the Russell 2000. This is actually the ETF that tracks the Russell 2000, and you can see that it's actually a little bit closer to its all-time highs than the S&P is, and actually went up during last week. So very positive signs in America, and certainly it's underpinned by some pretty reasonable economics and certainly corporate profits. So this is not a market that is going up just on speculative buying. There's a good solid basis for the American market to be rising. Now turning to the Australian market, our index had another great week, up 102 points for the week, following on I think from about 190 the week before. So we've had 2 really strong weeks, and we saw strength in all sectors, but in particular the banks and the major miners announced some pretty good profits, and also probably most importantly some good increases in dividends, and that really got the market excited over the last week and a half or so. So a couple of very good periods for the Australian market. And certainly the outperformers last week were BHP and Rio, which came in with much stronger results than were expected. So let's take a look at the Aussie market, the Aussie index, just for the record, and you can see it's been an amazing turnaround, which started on the 5th of February, 2 really powerful weeks. So for a change, we're actually outperforming the American market, and I think part of that is because people are just starting to think the penny's starting to drop, that China is not going to be the disaster that everyone was expecting it to be. So again, just more evidence of the fact that if you go along with the mainstream media, then you'll generally be riding the wrong horse. Now, turning to precious metals, which are obviously going very well at the moment. Gold put on another $7 on the week, and gold stock indices outperformed gold again, not by a great deal, but by enough to be noticeable. Silver also did fairly well. We'll have a look at those charts. But there are some smart lower risk ways to play this move in gold and silver over the next year or two. You don't necessarily have to buy speculative gold shares to make good profits out of this. And effective trading is about the relationship between reward and risk. It's not just about how much money you can make. If you've got to take a lot of risk to potentially make that profit, then it's probably not a good deal. The objective of trading is to make consistent profits in the lowest risk way possible, and there are some smarter ways to go about skinning this cat. Now, the major breakout in silver that we saw the week before followed through, so that was pleasing to see. We saw copper steady at $3.26, and where it's been for quite a while now, and oil managed to hold above $100. Let's have a look at the precious metals. First of all, we'll take a look at gold. So you can see now we've formed higher highs and higher lows. The 61.8% retracement from the last peak that we had in August last year, which was around 1433. So the retracement from the bottom back to that, there's a level at 1339. We've cleared the first two levels. So the next hurdle is for the market to close above this 1339 to 1350 area. Will be a little band of resistance. If we can get above there, that's a really positive sign. And then ultimate confirmation that we're really back into a strong uptrend in gold will come with a close above 1440. So they're the signposts. But again, you can see, similar to the S&P, we had a great rise, not much retracement, and really just a week of consolidation. So pretty positive signs. Similarly with silver, we had a terrific breakout the Friday before last, and went to break out of this very tight consolidation zone. This is pretty classic sort of breakout, and then no retracement. The price gapped up into Monday and then managed to hold those gains at around just under the $22 mark. Silver, once it gets going, will certainly outperform gold, and there's some terrific opportunities to really profit from what I believe is a new bull market in silver. Now, looking at copper, there's the spot copper chart. It hasn't really done a great deal. It's between this 315 and 340, which is profitable for a lot of the better copper miners. So that's positive. So just looking from an overall strategic approach, I've been saying for quite some time 2014 would be a more volatile year. That always happens as you get more and more advanced into a bull market. The market can have greater gains, but those gains come with greater volatility. So more care is needed this year. You need a more resilient game plan. You really need to be on top of what you're doing. If you just go wandering into the market in 2014 without much of a game plan and without much experience, then I suggest to you, you're probably going to find it extremely hard work. But if you go about it the right way, Volatility does bring terrific opportunity, and I think we're likely to get even better results in 2014 than we did in 2013. Sector rotations will continue. We're seeing that now since the middle of 2012. There has been a great focus on stocks that paid good dividend yields, and that's still going to be the case to a degree, but that's going to start to become less of an influence. And with interest rates staying so low around the world, people are going to get more and more prepared to take a bit more risk, and they're going to chase the growth stocks. So we're going to see sector rotations continuing throughout 2014. Now, as I mentioned at the start, I'm running a training webinar next Tuesday night. And I'm going to be covering that the headline is the best stocks to buy in 2014, and I'll certainly be looking at some of that, some of the trends. But most importantly, a far more valuable thing that I can do is to look at actually how to make money out of these trends. You know, just giving people stock tips is an extremely inadequate thing to do. So I'm going to be looking at what all successful traders do. These are the real keys, and you're not going to discover these for yourself unless you spend a long, long time in the market, as in decades. So this will attempt to cut through all that, show you the fast way about getting on the track that successful traders are on, and what your actual game plan must look like if you hope to make money in 2014 and beyond. Now I'll put a link in the description below this video with the details on registering for that webinar. If anyone wants to talk to me about the opportunities in the market, I mentioned terrific opportunities in America as well. We've got a small membership group that's participating in America, and that's very exciting as well. So if you want to get in touch with me, there's my email address down the bottom, and if you just want some more information about what we do, then there's plenty of that on our website. That's it for this weekend. Cheers.